Let's look at the various sectoral indices of BSE and NSE. And what we've done in this table is we've tried to present the top 5 sectors of each year, and the green boxes which contain the numericals represent the 3-year CAGR returns for each sector.
So with me, I have Sandip Bansal. Hello, Sandip. How are you doing?
I'm doing very well, Vikas. Thank you so much. How are you?
Yeah, all well. Thank you so much.
Going great. I can see.
Right. So we are getting overwhelming support from a lot of investors. So yesterday we had about almost 10,000 investors who attended our sessions live. Today we have about 8,400. So excellent. I mean, all of them curious to know your views. So that's the reason we've invited you. So there are few investors who have joined here recently. So let me just introduce myself. So my name is Vikas Agrawal. I'm the founder and CEO of AIF and PMS Experts India. We are emerging as one of the largest platforms for investing in alternate investments and portfolio management services. If you wish to know more about it, you can reach out to us at aifpms.com. Now, coming back to this conclave, ET Conclave 2. So last time we had a very successful conclave, and this time again we are getting very good support. The whole idea of organizing this knowledge-based conclave is to educate and empower the investor community as a whole, and for you to be able to enhance your overall performance. So with me, I have someone very special, Sandip Bansal. I had a chance to record a podcast with him last time when he was there in our office, and we truly enjoyed the conversation. So Sandeep represent ASK Investment Managers. In fact, they are one of the supporting members. They are gold partners with us, and because of their support, we are able to reach out to investors like you, along with ET Markets. So Sandeep is I mean, he's with ASK, and he studied from IM. Which IM that you studied? Sorry, I
Ahmedabad.
Ahmedabad. Okay. So brief introduction about him. He brings about 2 decades of experience, out of which particularly 16 years when it comes to equity investing. Sandeep joined ASK from SBI Life Insurance, where he has been an equity fund manager and was head of investment research, leading research across asset classes. Sandeep has also worked on the sell side with UBS Securities, Kotak Institutional Equities. Before that, Sandeep was a business consultant at KPMG and has banking experience with Citibank also. So what we're going to talk about is the satellite approach, which is the ASK Lighthouse portfolio, which is recently been launched by ASK. So we're going to talk about that. So without any further ado, I would hand it over to Sandeep ji for his valuable wisdom. Please share it with us. Thank you.
Thank you so much, Vikas. Welcome, everyone. So what we are going to talk about is the significance of themes in investing. Firstly, what are themes? Themes can take shapes of various types. So let's say an example would be export could be a theme. Within exports, we could have multiple sectors that represent this theme. So exports themes could be represented by IT, by textiles, and even by autos. Similarly, consumption can be a theme, and consumption again can be represented by, let's say, by FMCG. It can be represented by media. It can also be represented by the QSR sector. It can be represented by consumer durables. So themes do change over a period of time. In stock markets, there are a few themes which come into focus at a point in time. And these themes are represented by a few underlying sectors. So to take this example forward, let's look at the various sectoral indices of BSE and NSE. And what we've done in this table is we've tried to present the the top 5 sectors of each year, and the green boxes, which contain the numericals, represent the 3-year CAGR returns for each sector. So just to take an example, the BSE FMCG index gave a 24% CAGR return over a period of 3 years in the year 2011, right? There are a number of important things that are apparent from this slide. The first important thing apparent is that all sectors do not perform well at the same time, right? So all sectors or / all themes do not do well at the same time. An economy has various aspects, various sectors, and at a given point in time, only a few of them will do very well. Secondly, no theme is an evergreen theme. Each theme has its own time in the sun, right? So we've seen that these series of green boxes are changing over periods of time. We are not seeing any one index which is a continuous green line over this period of the last 15 years or so. So that is the second key takeaway. The third important point is that whenever there are long streaks or a theme continues to do well for a period of time, that streak can be for a period of 6 to 8 years. Because these are 3-year CAGR returns, maybe we can add a couple of years, and then we see that themes generally can go on for a period of 6 to 8 years. We've seen this in consumer durables, we've seen this in auto, we've seen this in healthcare previously. So based on this insight and based on this assessment and evaluation of markets, themes, periodicity of themes, and importance of themes at points in time, we came out with this fund called Lighthouse. But let's kind of validate this with a few specific assumptions, illustrations as well. So one of the illustrations is the chemicals industry. So the chemicals industry, if you look at between 2015 to 2021, India's market share continued to increase, which is visible in this gray line. So India's market share, which was roughly around 2%, went up by more than 50% to 3% plus over this time horizon. During the same time period, if we look at the margins of some of the leading companies in the sector, they almost tripled, right? So if you look at in FY15, these margins levels were used to be around 5%, and then they become closer to 14-15% in a period of 7 to 8 years. And a further confirmation of what happens when market share improves and when profit improves, we can see the result in stock prices. So this is an index of the leading chemical companies in the country. If you look at the dark brown line, it basically shows that how the industry has compounded at a CAGR of 35% between 2009 to 2021. So this is the entire journey of this chemical industry. But if you take only the high growth phase, or the phase wherein the maximum transformation in the industry is taking place, which also coincides with the highest shareholder return, that period is somewhere between 2015 to 2021. This is what we would call the high growth phase, and our endeavor in our investing style in this fund would be to capture this high growth phase from this entire journey of a particular industry sector or theme. One other example could be the FMCG space. In the FMCG space, we saw that between 2010 to 12, the sector outperformed the broader BSE 500 handsomely, and the reasons were quite a few. The government had increased MSP prices, plus there was a lot of spending in rural areas and on welfare schemes by the government, whether it be through the Pradhan Mantri Gram Sadak Yojana, or it could be through the new National Rural Health Mission, etc., and Manrega, obviously, which boosted the consumption of low ticket items, which was essentially FMCG. So what we are seeing is that whenever there are macro structural trends in a sector, they uplift all boats. They behave like a rising tide, and that rising tide lifts all boats in the sector. And in our investing approach, we would like to select the best of the boats which can go on for a longer period of time. So which is what the Lighthouse portfolio intends to do? It intends to invest in 3 or 4 focused themes or sectors at any point in time, and it proposes to remain invested in them not for a 5-year plus perspective, but more from a 2 to 4 year time horizon, more from a medium term time horizon, so that we can benefit from the highest growth phase in a particular sector or theme. So what are the key themes that we are looking at in this fund? There are broadly 4 key themes that we are looking at: manufacturing, and on the back of manufacturing, it is infrastructure. On the back of manufacturing, it is energy. And the 4th theme is defense. Now, why the themes? While all of us already perhaps know this, but just one slide to kind of drive home the point further. If we look at this chart, it presents the spending of the national government or the central government as a percentage of GDP on capital investments in the country, which is basically investments in infrastructure, defense, etc. If we look at this slide, between 2006 to 2020, we were essentially in the ballpark range of 1.6 to 1.8%. We could never really break out of this range on a sustainable basis. It might have happened for an odd 1 year, but then we again faltered. But if we look at time since the COVID period, from FY21 onwards, there has been a substantial material, directional, and somewhat kind of a structural increase in this spending. And the budgeted expenditure in FY25 at 3.6% of GDP is more than double the number that we saw in FY20. And we also have to keep in mind the fact that private sector capex has not really picked up in a meaningful manner yet. Perhaps could be an expectation from the second half onwards this year, and that will add over and above to the overall spending momentum in the country on the investment side of the economy. And this is what this fund wants to leverage upon. A few examples from a sectoral perspective. If you look at power, we are roughly at around 450 gigawatts of power capacity today, which we propose to increase to 900 gigawatts. And given the increasing intensity of the manufacturing space in the economy, given the fact that digitization is increasing in our lives, which obviously requires greater power consumption, given the fact that EVs are taking precedence now in our overall energy basket, and from an automobile perspective, it is quite likely that these numbers which the government has in mind would need to be increased further. And anyways, we've seen gradual and continuous increases in the capacity addition targets on the power side. It is not only power, infrastructure across is increasing significantly over the last many years. We've seen this in ports, airports, railways, etc. And in many cases, we are still not even halfway through in the journey. So, there is a very long distance to go. We are a vast country. Manufacturing requires a lot of movement of goods and people, and hence a logistical capacity within the country needs to be spruced up significantly. Defense, we have seen continuous increases in the defense spending. It is likely to more than double in the next 6-7 years. Few key things that are happening in defense. Firstly, indigenization or import substitution. If you see these yellow bars, which highlight imports into the country, they've been gradually reducing, and what has been increasing is these blue bars. That will continue to happen. In addition to that, the export component of revenues of the defense companies is gradually increasing. It was nothing much 5 years ago, maybe in low to mid single digits. It is now in the early teens, and government has kept some stiff targets. So this is also going to provide a significant boost to the defense companies' top lines and bottom lines. Manufacturing, we have seen various rollouts by the government, whether it be in terms of phased manufacturing programs, it be in terms of the PLI schemes. There are huge fiscal incentives provided, which are helping develop the entire ecosystem of manufacturing. Let's take a few examples, because these incentives are right from drones to large-scale electronics. So the expanse is really wide, and there is an expectation that more and more such schemes are going to be rolled out. Let's take the example of mobile manufacturing in the country. So one of the leading mobile manufacturers in the world, in fact the leading one, almost had no presence in India around 6-7 years ago. They started manufacturing in 2017 or so. And their initial target was, and I'm talking about Apple, was around 5% of the global manufacturing should be in India. Then they increased that target to, I think, more like 25% or so. And now what we hear is that they could further increase their targets, much higher than this initial number over the next 3 to 5 years. India used to export roughly around $300 million of mobile phones a year, about 7 years or so ago, and now it exports around $1 billion a month. That is the kind of transformation that we have seen in the manufacturing sector in the country, and this transformation is actually going to gather pace over a period of time. There is going to be what is called the snowball effect. Once things gather pace, they reach a certain momentum and size and scale that they really become huge. And linear thinking human brains cannot really measure or assess how big things could become in a few years' time. One more example would be the semiconductor manufacturing ecosystem that is developing in India as we speak. Maybe even a few years ago, many of us would not have thought that it would really be a possibility in the country. But we are seeing this happening. This is the structural transformation that we want to leverage in this fund. And this is not limited to one sector. This is across manufacturing, across infrastructure and its various subsectors, across energy, and across defense. So what are some of the key aspects of this lighthouse portfolio? Firstly, it will invest only in a few themes. So only in 3 to 4 themes. Generally, our other funds are more diversified in nature, and they invest across 7 to 8 sectors or maybe more. This is going to be limited to only 3 to 4. And we will invest only in those themes and hence sectors wherein there is structural transformation underway. What do we mean by structural transformation? The changes in the sector should be deep, they should be large, they should be significant, and they should be of a long-lasting nature. We are not looking at playing transitory themes or benefits to a sector which could last for about a year or so. We want to capture big changes, and those big changes only happen when the transformation is truly deep and structural in nature. We are not going to remain invested in a particular theme for a very long period of time, because the idea is to capture only the high growth phase of a particular theme and not play the complete cycle. And hence, the management of themes is going to be relatively agile, and we are going to remain invested in a particular theme more likely from a 2 to 4 year perspective. We are going to apply both a top down as well as a bottom up approach in investing, which is the first time for ASK, and I will delve into this in this slide. So the way we are going to go about in this fund is we will identify key themes on a top down basis. This is going to be from macro trends, developments, policy actions, whatever we are seeing on the ground, etc. So let's say currently we've identified infrastructure and manufacturing as two of the key themes in this fund. Then we are going to drill down into the various sectors within these themes. So, within infrastructure, there is power, ports, railways, etc. Then within power, there could be thermal power, there could be hydro, etc. Then within thermal, again, we are going to map out the complete value chain. So there could be a power financier, there would be a utility, there would be a power plant builder, there would be someone who would supply the boiler turbine generator equipment, then there would be transformers required, there would be conductors, the power would come to our home, so we would require cables and wires. Then for thermal power, we would require coal. So we will map out the complete value chain. After that, we will select stocks on a bottom-up basis. And while selecting stocks, we are going to keep key qualitative parameters in mind. Those are likely to be strong moats or competitive advantage, leadership positions. We are not going to compromise on key aspects of shareholder value creation, and we believe that leadership is an essential ingredient of the same. We will not compromise on management quality, and we would want a margin of safety at the time of investments. We are going to select only those themes which are relatively young, because we are looking at the high growth phase, and youthful themes or young themes are the ones which are able to run faster and for a longer period of time. We are not looking at short-term themes. And once the theme has kind of played out, or the maximum money that we had anticipated in the theme has been realized, is at that point of time is when we will look at getting out of a particular theme. Or if we get a better opportunity elsewhere, or we believe that there are greater structural transformations that are taking place in some other pocket of the economy, we will then move money to that particular theme and exit the current invested theme. So the relative aging of the theme is going to be a key parameter for us for deciding as to whether to enter the theme and when to exit the theme. Aren't there any risks to this approach? There are always risks to any investment. And the three key risks that we believe are there in this approach: firstly, if we identify the wrong theme. If we identify the wrong theme, then obviously we stand to lose a lot of money. But we don't think that the themes that we've identified are wrong, because India's manufacturing component is less than 15% of GDP. It wants to take it to 25% of GDP. Defense is an essential requirement, and in infrastructure and energy investments are going to be on the back of manufacturing. And we do believe that these themes are the ones which are going to stay and are relevant for a long period of time. The second biggest risk is if we identify the right theme, but at the wrong time, when valuations are almost full, and we come at about the peak of the cycle. Over here also, our thoughts are that as we saw in the slide in the earlier part of the presentation, themes generally last for 6 to 8 years, the ones that have a long streak. And we are about 2 years in the cycle, maybe another 4 to 6 years are at least to go. And hence, we are looking at playing 2 to 4 years out of that. We expect to make money from three aspects in this fund. Firstly, through surprises in growth. We believe that growth is going to surprise us very much in this sector, because the power of transformation is so high that it's difficult for us to envisage what all changes could come through. Secondly, the growth is going to surprise us for a very long period of time. While a lot of investors and market participants are looking at valuations from a 1 or 2 year, 3 year perspective, we believe that this growth is going to go on for a very, very long period of time. And when high growth is combined with long period growth, the effects are not additive, they are multiplicative in nature, and the benefits that are realized in valuations are significantly high. While valuations do seem to have normalized from previously very depressed levels of many years, we believe there is distance to go in many pockets of these sectors. So we don't believe that we are here in this cycle, so which is the third risk, that while we identify the right sector and the valuations are also not at the top, but we are close to the top. We don't believe that we are close to the top, and still there is a good distance to go. This is just the last slide. This is a market cap agnostic portfolio. We are looking at investing in around 15 to 30 stocks. Whenever the themes are narrow, the number of stocks are going to be lower. But whenever the themes are broad, which is the case currently with infrastructure, manufacturing, etc., the number of stocks that we currently own are more like 28. We don't have any sectoral limits. So currently the portfolio comprises 60% manufacturing, 60% infra, 20% manufacturing, 10% energy, and 10% defense, roughly speaking. But these things could change as opportunities emerge. From a market cap perspective, there are no limits that we have in mind or allocations. But currently we have 40% large cap, 40% small cap, and 20% mid cap. So this is it from our side. Thank you so much for your patient listening.
Thank you, Sandip. It was great presentation. Generally, in last 20 years, ASK has always been sector agnostic or theme agnostic. But I'm glad that with your joining and the entire investment team now is conceptualizing this lighthouse concept where you're picking up these themes from a long-term point of view, and it's not that you're buying and selling and trying to do something sort of trading in the portfolio. So it's a very good concept. I personally liked it very much. So thank you so much, and wishing you best that you continue to generate alpha in the portfolio.
Thank you so much, Vikas, and thank you so much, everyone.